So, with all the records, the wonderful records you've kept, it should be pretty easy to fill out any tax forms that are required for your farming business, your farming venture. There's a great farmer's tax guide. You can get it on paper by ordering it from the IRS. It's also available in PDF form online. They make a new one every year. It's great reading to fall asleep by. A lot of it will not apply to every farm. And so over the years, you will know what applies and what doesn't, and you'll know which parts you can just skip. But it's really good to look through it every year. They have in the beginning what's new for each year, so you catch things that, so you don't miss things that maybe have changed since the previous year. And then as a farm business, there's a special tax form called Schedule F that applies to your business. It's comparable to a Schedule C, which is a regular business tax form, but this one is geared towards farming, so it has the right kinds of categories that apply to farms. And again, a lot of them won't apply to your particular farm. You'll learn which ones do, and the instructions that go with are very clear. And so if you have good records, it's quite easy to fill out the forms. I have found that the records that I want to keep for myself don't always match their numbers and their categories, but because they're obviously looking for they're comparing information for different reasons. So for instance, they have a category of feed. I actually want to know the feed for all the different animals we have. So I have to combine my feed records and into one line on the IRS form. But it's relatively easy. The things that they break out are similar to what most farms would want to break out of their records. So to just walk through it, the farm income is pretty straightforward. The simple and obvious one is what you've grown. You start it, you grow it from the beginning, and you raise it, a vegetable or an animal, and then you sell it. That sale is your income, and you count that whole income. It's a little more complicated if you have purchased an animal or purchased something and grown it or raised it, and then you sell it. You have to treat that somewhat differently because that was a capital purchase. We'll talk about that a little bit later. And then you have an income from it, but what you've earned actually is the difference between what you paid and what you sold it for. So there's a separate line actually to record those kinds of sales, things that you didn't grow from seed or that you didn't have birthed on your farm. So is a different form for that and a different way to account for that. But that also is relatively straightforward. There's a lot of other lines of income on the income portion of the form that apply to very specific programs, government programs, insurance programs, and things like that, which I actually don't have any experience with. So you would just want to go to the instructions. Whoever gave you that income probably has information about that. So know your situation. I know we've always grown things or we've purchased things to resell them as a farmer. And so the first two, number one and number two, are the only ones that I have experience with. There is one other sort of catch-all one that's other income that involves refunds, or if you get a grant for something or to do something on your farm, or things that don't really fit in a typical category but need to be reported as income. There's a catch-all other income line. And there's one that's called custom hire, which occasionally farmers have skills that other people want to use. And you don't necessarily have a separate business where you would list that as a business income on a Schedule C. You get a 1099 for it probably as a contractor. And they have a line that says custom hire, and that could go in that line. So you're reporting that income without having to be a completely separate business. You're a farmer who earned income from somebody else for your skills. So the income side is pretty straightforward in that way. And then the expense side is also pretty logical. I guess I should go back. There's two ways of accounting for farm expenses, and there's a cash method and an accrual method. Most farmers are cash method. That means the year that you get the money, you count it. The year you spend the money, you count that expense in that when it happens. Accrual means that's more it's used in some businesses, especially who have inventory, meaning that you spend money, but you actually don't count that expense until you sell the item, or you're holding something in inventory. It's a much more complicated way of keeping track of things, and most farmers, and what I have most experience with, is the cash method, and it's the simplest. It's straightforward: when received, when spent, and it's very clear lines there. So the accrual method, I can't speak to. I'll speak to the cash method. Typical expenses of farms for growing vegetables would be fertilizers, any pesticides or chemicals you used, any supplies, the obvious things: feed for raising animals, bedding, supplies you bought to build something for your farm, or fix things, especially machinery. If anything lasts or does not get used up in a year or lasts longer than a year, you have to consider whether it's a depreciable item, meaning that it's got a life that expense for it might need to be extended over more than that 1 year. And that is a more complex decision we'll talk about a little bit later. Otherwise, the typical things are what you would expect. There might be a few things you don't think about. There's expenses that you can count, that maybe are not direct expenses, but for instance, like the use of your home can be an expense for your business. If it's your farm, if it's a business, there are specific rules on that area that you claim has to be used exclusively for that business. So it can't. There's a particular line that's the business use of home expense, and there's that area that you claim can't be used for many other things. So that's why having a home office is great, but in our case, it's in our living room, so we actually can't claim the space that I have my desk with all the records in it. But if you do have a space, we have a greenhouse in the basement. We can claim that space because we don't use it for anything but the farm. So that ends up being pretty reasonable for us because there's a fixed amount you can count per square foot. And we have a really small house, and the greenhouse is pretty big, so it comes out pretty good. It's an attached greenhouse in our basement, and so we get a nice expense to claim, which isn't actually much cash out of our pocket, really. And so there's things like that you can learn over time. And if you read the Farmer's Tax Guide closely and you determine which things you can apply, that it's good to take advantage of those kinds of things. They're there for the purpose of they are legitimate business expenses. And the only reason things get a little fuzzy sometimes is because you sometimes use things for your personal use as well as business use, and that just always needs to be put into consideration. So another example might be, in our case, we drilled a well and put up a windmill, and we used that water for personal use, but we used the vast majority of it. The reason we needed it was for the farm. And so we didn't claim the entire amount that cost, but we claimed a reasonable percentage. I don't remember what it was offhand, but what seemed reasonable. And I guess that's sort of for all of it. That's what I would recommend. I have been through some various sort of not complete audits, but been asked about some various expenses and things on things that I have claimed. And my philosophy is to always have a good reason for why I have claimed an expense towards my business, have the records to back up what I'm claiming, physical records and like receipt or invoice or a record of how much water we use or things like that, in the case of the well, and business versus home. So and then be able to just back that up so that I can legitimately say, this is why I thought that was a business expense. And the IRS might disagree with you, but if you've done it in good faith, you aren't trying to cheat them out of anything. You may owe taxes on it, but you probably won't owe a penalty at least, So just have a good reason, know your business well enough that you're able to justify that reason and keep good enough records to show that, and then have at it. You are allowed expenses. You should take those expenses you're allowed so that you aren't paying more taxes on the profit than you legitimately owe. one other sort of less direct expense would be mileage for any farm-related travel that you do. If you're delivering vegetables, if you're taking an animal to get bred, things like that. Keep track of the mileage. Have a physical record of it. They'll want you to check a box that says you have a written record of the miles you took. It helps to have a receipt or some sort of evidence of why, that you bought something on that trip or that something happened on that trip, so you're not just making it up. I've never had to show those records, but we have them. And so I'm not worried if we ever get called on the various mileage. And mileage can add up, especially here. We live a long ways from everything. And so the mileage, again, is not it's a 58 cents a mile. The rate changes every year, and you just know what that rate is. And it's not cash out of pocket per se, but it's an expense against the business, and so that helps reduce our tax liability, and is an important thing to take advantage of if you have that expense. I think that covers most of the, every farm is going to have its own expenses. There's utilities, there's taxes that are directly related to the farm. If you maybe I'm trying to think if there's some other things that are expenses that are maybe not obvious. Can't think of any offhand, but there's things come up with every farm. Yeah, so the list is not all inclusive. There's lines you can write your own ones. They don't have one on like education or training that you take, and so I have an education line, because that's part of us trying to become better farmers, is we buy books and we go to conferences, and so there's not an actual line item for that, but I keep a line item of that, and those are important parts of being a better farmer and being a better running a better business. So there might be other things like that depending on your type of farm, things that don't fit the categories but are legitimate expenses